Welcome to the world of Bitcoin. If you have ever wondered what Bitcoin is, why it exists, or how it can change the way we think about money, you're in the right place. Today, we're diving into Bitcoin's core purpose, the problem it solves, and why its unique design makes it a game changer. Plus, we'll talk about Bitcoin's halving cycles and how they drive its value. Let's get started. First, let's talk about the problem Bitcoin solves. For decades, governments and central banks have controlled the money supply, promising that currencies like the US dollar are stable and valuable. Historically, they backed this promise with gold, a finite resource that gave money its worth. But over time, that promise was broken. Governments moved away from the gold standard, printing more money whenever it suited their needs. The result: inflation. Your dollar buys less and less over time, eroding your savings and purchasing power. This is where Bitcoin comes in. Created in 2009 by the mysterious Satoshi Nakamoto, Bitcoin is a decentralized digital currency that operates on a blockchain, a transparent, tamper-proof ledger. Unlike traditional money, no government or bank controls Bitcoin. Its value isn't tied to promises that can be broken. Instead, Bitcoin's value comes from its fixed supply and the real-world effort required to create it. This makes it the only known asset with a truly fixed supply, unlike gold, where new deposits can be discovered, or fiat currencies, which can be printed endlessly. By the year 2140, all 21 million Bitcoins will be mined, meaning no new coins will enter circulation. And here's a correction to a common misconception. About 99% of Bitcoins will be mined by 2036, not 2032. With the final 1% trickling out slowly until 2140 due to Bitcoin's design. This scarcity mimics digital gold, making Bitcoin a hedge against inflation. But how are new Bitcoins created? Through a process called mining, powered by something called proof of work. Miners use powerful computers to solve complex mathematical puzzles, consuming real-world electricity and computational resources. Think of it like mining gold. You need energy and effort to extract it. This proof of work ensures that Bitcoin's creation is costly and deliberate, giving it intrinsic value.
Unlike seashells, tulips, or even gold, where the total supply is uncertain,
Bitcoin's final amount is locked in time by code, making it uniquely predictable. Now, let's talk about Bitcoin's halving, a critical event that drives its value and market cycles. Every 210,000 blocks, or roughly every 4 years, the reward miners receive for creating new Bitcoins is cut in half. This is called the halving, and it slows the rate at which new Bitcoins enter circulation, increasing scarcity. Historically, halvings have sparked significant price increases because reduced supply meets steady or growing demand. Let's look at the halving history and what's coming next, based on data from bitbo.io. The first halving in 2012 reduced the block reward from 50 to 25 Bitcoins. The price soared from $12 to over $1,100 within a year.
In 2016, the reward dropped from 25 to 12.5 Bitcoins, and Bitcoin climbed to $20,000 by 2017.
The 2020 halving cut the reward to 6.25 Bitcoins, and Bitcoin hit nearly $64,000 by 2021. The most recent halving in April 2024 reduced the reward to 3.125 Bitcoins, and we're already seeing market excitement. The next halving is estimated for April 2028, when the reward will drop to 1.5625 Bitcoins per block. Future halvings will continue every 4 years until 2140, when the reward reaches zero.
Here's a quick look at the estimated schedule.
2028, block 1,050,000, reward 1.5625 BTC. To 2032, block 1,260,000, reward 0.78125 BTC. For 2036, block 1,470,000, reward 0.390625 BTC. And so on, until the final halving around 2140. These cycles are key for investors, as halvings often trigger bull runs. The strategy? Accumulate Bitcoin before the halving, hold through the price pump, and consider taking profits after the cycle peaks, typically 12-18 months later. So, why does this matter? Bitcoin solves the problem of untrustworthy fiat systems by offering a decentralized, transparent, and scarce alternative. Its fixed supply and proof of work make it a store of value that can't be manipulated. The halving cycles create predictable scarcity shocks, driving demand and potential profits for those who understand the rhythm. Whether you're a long-term holder or a trader, Bitcoin's design rewards those who see its vision.
A currency free from broken promises.
Bitcoin isn't just code. It's a revolution in how we think about money. With only 21 million coins ever to exist, the gold rush is on to accumulate before the last coins are mined. Follow the halving cycles, stay informed, and decide for yourself if Bitcoin is your ticket to financial sovereignty.